own sense, Mehraboon, of how the next few weeks might shape up the market? Do you think we will spend some time consolidating, trying to find a range, or are things quite slippery out there?
Personally, I feel the markets look a little bit oversold. So any positive news, especially on the political front, which I was not giving too much of credence a month ago, as I admitted to you, but right now it's playing an important role. So if we had the nuclear treaty signed, we could have a sharp bounce back. But having said that, the fact is, it's very, very clear right now that whatever happens to the indices, even if we lose some more ground right now, say another 5 to 7% from here, I personally feel not everything is going to fall. And if we go up from here, not everything is going to rise. The problem, some of the sectors, some of the stocks in those sectors which have taken a beating, I personally feel they deserve a beating. And some of the stocks in some sectors which are relatively immune to some of the concerns which we all have right now, I think they have taken a beating for no fault of theirs. So sooner or later, I think valuations will play a very important role. So stock picking, according to me, has never been as important as what it's going to be now, at least not in the last 3 to 4 years. Money making is going to be very difficult, but there are going to be plenty of opportunities.
Okay, to a break then. It seems 4,000 will be a bit elusive. Even so, well off the lows of the day, as you can see, for both the Sensex and the Nifty, in a context where global markets have had a very, very bad session. Rajat, just to get a couple of chart checks out of the way as we wind up trade, had a look at NTPC.
Yeah, NTPC actually is showing good strength today, but Mitali, you have to watch for the levels of 170 to about 176. Of course, that quite a distance from the current levels, but 170 to 176, if that level is crossed, then you will see NTPC getting real good strength. As of now, one can of course take a long position in this with a stop below 156, but again one needs to book profits if that zone between say 170 and 176 is not crossed.
Important news for Mysore Cements as well. The stock should come up on your screens. 72 rupees is what the promoters were paid, because that includes a non-compete fee. But for minority shareholders, there's going to be an open offer at 58 per share. Still a vast gap between where the stock is trading right now and the open offer price that is being suggested. So 58 rupees per share is what it's going to be, and it's not going to be 72, which included a non-compete fee for the promoters. The stock has just spiked up, as you can see, up close to 20%. The market has not done too badly. This is actually a resolution to something that had been appealed, so it has been set aside, and the price was the one discussed, and it's not going to be 72, so the confirmation on that. The market is winding up trade, so let's get back straight to that. Mehraboon, just one quick word from you on what's been happening with some of these newer listings, though. They seem to have a not nice appeal going with them.
I think yes. I think virtually the retail interest as far as IPOs goes is virtually, I would not use the word waning, I would say it's completely off. I would say not many are taking interest. And what we saw over the last 2 to 3 months, I think I would say some of the issues which were in the pipeline which had to come out. What concerns me, Vitali, is that quite a few companies which had got the SEBI approval have decided not to come out with their IPOs, and the number is increasing every passing day. As per the latest report which I read, as many about more than 100 companies which are planning their IPOs over the next 2 to 3 months, possibly are taking a second look at it and possibly planning to keep off the market for the time being. So yes, not a very healthy picture on the IPO front.
Rajat, the market seems to have held 3,900 today. Where is the next support post 3,900 mark on the downside? Is it 3,850, or is there something in between that you'd watch?
So I would say that now you have several support levels, minor support of course, 3970, I'm talking about the spot Nifty, 3970 and 3930, then you have 3885, and then you have that major support of 3842. So now I would rather be looking at some kind of an upside, because against all those negative cues, if the market can show some bit of strength today, then perhaps something better is in store for us. But let's watch out how things pan out.
Okay, gentlemen, just winding up trade, so let's focus on that for a bit. We'll not make it to 4,000, but will not be such a bad performance given the circumstances. The Nifty pulls off from the day's lows and finally closes sandwiched between the 3,900 mark and the 4,000 mark. All credit goes to capital goods this afternoon. It was looking a bit iffy yesterday, the way some of those stocks came off sharply like BHEL and L&T. But today has been the day for capital goods, stroke power, stroke infrastructure. So many of them have had a good performance, including stocks like NTPC. Outside of the index, something like a JP Hydro has not done too badly. IT will go out the big loser. So Infosys, Wipro, were all looking distinctly nervous, and even some of the heavyweights did not do too well in trade. For the mid-cap space, it's sugar that shows up the biggest losses, but some of these trading stocks were getting back into the groove. So by the time we wind up, Chambal Fertilizers, IFCI, all of them are actually holding up in the green. And we should run a quick status check on where Reliance has closed for the day. I don't know if for the first time it's closed below for the first time in a long time, it's closed below the 2,000 mark. Yes, I think that's how it will close up. So Reliance has had a bad session, albeit off the lows of the day for that stock as well. 1980 is where Reliance finally winds up trade. Rajat, quick call on Reliance and what levels you'd watch from here on for it.
See, 1980 on the closing basis is definitely very important, and 1950 is the next support level to watch out for. If that gets broken with volume, then 1890 would be the next support to watch out for. And on the upside, 2025.
Our experts are still with us, Mehraboon and Rajat. Rajat, a quick trading call from you. Given the current, I don't know if you have to call it resilience, that may be a strong word, but the fact that the Nifty hasn't buckled under, would that mean that for tomorrow you would actually have the courage to initiate any long trade?
Yeah, sure, Lata. Actually, if you look at it, I would say that Nifty future is closing 100 points above the day's low. That's definitely an encouraging sign when you see Europe showing weakness, Dow futures showing weakness, Asia closed weak. So given that kind of a scenario, and if the Nifty future were to hold around these levels tomorrow morning, then chances are that there will be a long side trading opportunity. And once the Nifty crosses, say, 4093 on the upside, of course that is still about 100 points off the current levels, then definitely more strength would come in. My feeling is that a short-term cycle is about to come to an end very close by, and once that is through, maybe in a day or two, we would see some upsides.
Okay, well, now a question from an investor's point of view to you, Mehraboon. Given the similar adversities that are surrounding us, both globally and domestically, would you say an investor, even for the best of stocks, can really wait and bide his time? Better levels are around the corner?
Definitely, yes, I would say that too. A very decent, very lovely question and a very simple answer. I think what has happened, let's accept it, Lata, is that our vision has been completely blurred by the fact that our portfolios have taken a severe beating, and this is across, it applies to everybody. There's no exception amongst us. Everybody has lost money ranging from 25%, 20% to even 50% over the last 6 months. And the vision has definitely got blurred. But if you ask me, an investor coming to me right now, I think it's the best time to buy. But it's going to be very stock selective. I think all sectors which are affected by the concerns which are in front of us, and all these concerns are real. Nobody amongst us knows where oil is going to stop, where interest rates are going to stop, where how much further inflation is going to go up. So let's not fool ourselves. Let's not try to predict what is going to happen, because nobody amongst us is capable to predict as to what is going to ultimately happen. But there are sectors, there are companies within sectors which are available at very, very, very attractive valuations, which are relatively immune to most of these concerns, which don't have great capex programs, which don't have to go to the capital market or to the debt market to raise money. And those companies, according to me, should be bought and are being bought by the savvy investors right now. And over a period of time, I'm quite sure this investment is going to ultimately yield lovely returns. Because
name two, Mehraboon, name two.
Well, I would say Tata Steel among the front-line stocks at around 630, 635 this morning was a lovely buy, and the pharma pack at Dr. Reddy's, at Glenmark, Orchid Chemicals, there are many, Lata. And if you allow me to say, I think I would ask you to go back and check the figures, especially the 3 pharma companies which I mentioned. The last 2,000 points fall in the Sensex. I think at least a couple of them, if not all the 3, have given positive returns.
Okay, Mehraboon, Rajat, thanks much for joining us. We're back with the other market that's creating jitters, commodity markets.